Well, all right, guys, let's go ahead and get started with our weekly outlook. Very first and foremost, guys, if you can do me a huge favor, if you're watching this right now, whether you're live or you're watching the recording, if you could smash that like button, that'd be awesome. It really supports the channel. I'm really working hard to grow this YouTube channel for you guys. I know I haven't been able to push out much more content other than the weekly outlooks. Obviously, the past 2 months I've been traveling in Thailand, but I did buy a really nice high-end camera. I am planning on filming a lot of videos for you guys, releasing a lot more content throughout the upcoming year. So make sure you are subscribed, you have notifications turned on. Anything I post is going to be trading related and extremely valuable for you guys. Maybe a couple lifestyle things here and there, but it's cool to always motivate you guys. But definitely please smash that like button if you're watching this live or watching the recording and you get some value out of today's webinar. But guys, this is where we stand. So before we jump into things, let me just say that anything I say today is not financial advice, guys, or investment advice. Everything I say today should be taken as educational and informational purposes only. And if you guys are here for your first time, I definitely welcome you guys. My name is David Schinkel. I'm the CEO and founder of Positive Traders. And if you look at my YouTube channel, you'll see that pretty much for the past 2 years, every single Sunday at about 8 p.m. Eastern time, I go live for free for you guys and just kind of share my thoughts on the markets. You know, some weeks are going to be more exciting than others. Some weeks I'm going to give out like a whole setup and it's going to be, you know, super crazy and everything's going to be awesome. And other weeks it's going to be a little bit slower, and that's just the way trading is. And I'll put it this way for you guys. Today's not going to be super exciting for some of you guys. It's going to be more like informational and just giving you guys some my thoughts on the markets moving into the new year. I don't really have a whole lot of trades that I'm specifically looking at, and that's because of the news that's coming out this week. And because me personally being a higher time frame and longer position style trader, I'm not a huge fan of getting in and out of the market every single day. Those of you guys that know me, those of you guys that are students of mine and that are in the group know that I take on average like 10 to 15 trades in an entire month. You know, so sometimes it's more than that, sometimes it's less than that. You know, some weeks we won't take a trade in an entire week, or some weeks we'll only have one trade in a week. Sometimes we'll take 7 trades in an entire week. It just depends on the week. It depends on what's going on, but I am definitely respecting the fact that you know, today, depending on where you are, like for me right now, it's December 17th in the morning, 8 a.m. because I'm out here in Thailand where I've been for the past 2 months. I'm headed back to the States finally on Friday. Most of you guys, I'm sure it is the evening of the 16th, but regardless, guys, we're getting very close to the end of the year. And for those of you guys that are trading Forex and it might be your first time getting to the end of the year, you know, you might have this in your head that it just is always the same in you know, just trading. It doesn't matter what day it is or what week it is or what time of the year, but that's definitely not the case in my opinion. You really need to respect the fact that we are getting very close to the end of the year. A lot of the major players, commercial traders, institutional traders, have pulled out of the market, and that's going to create a lot of thin liquidity in the market. And I'm just not a big fan of trading towards the end of the year. Not to mention that, guys, if you guys look at my MyFX book, that's the biggest thing that matters to me, is my progress, is my results on a month-to-month basis or a year-over-year basis. I'm already up 6% for the month, right? I'm not rushing getting into a trade. And to be quite honest, after this week, if I see a trade this week, I'll definitely take it. But after this week, I am done trading for the rest of the year. So that being said, there is not actually going to be any weekly outlook next week, and I don't believe that there'll be a weekly outlook the week after either. That'll be the 30th for most of you guys, or well, it'll be the first if I'm talking about Thailand time, but I'm just talking about the 16th Sunday. Next Sunday will be the 23rd, and then the following Sunday will be December 30th. So for the next 2 weekly outlooks, I haven't really decided yet, because I know I'm not interested in trading. I know I'm not interested in, I'm not like going to be taking any positions or any trades whatsoever. So I don't really see a point of doing the weekly outlook, but it is kind of tradition for me to do these every single Sunday. So, maybe I'll hop on for like 5 seconds and say what's up and then get off. But I really don't see the point in wasting your guys' time either way. So I'm just letting you guys know ahead of time. If you guys follow these weekly outlooks for the next 2 weeks after this weekly outlook, there's not going to be a weekly outlook. We're going to be done, and then we're going to hit it fresh in 2019. But the last 2 weeks of the year, or the last week and a half of the year, I am not interested in trading whatsoever, okay? But let's get into what I might be interested in trading this week, guys. Let's look at the economic calendar to start off the week. And this is a crazy week, guys. Absolutely nuts. Okay, there is a ton of news in the markets this week. There are 3 interest rate decisions. Okay, so we have FOMC, we have the Fed rate hiking interest rates, and then we also have the Bank of Japan. And I apologize, guys, I literally just woke up like 20 minutes ago, so I'm still like somewhat like half asleep. It's like 8 in the morning here. I didn't go to sleep until about 4 a.m. So if I'm a little tongue-tied, I apologize. But there are 3 interest rate decisions this week. Okay, we have an interest rate from the Fed. We have for the U.S. dollar. We have an interest rate from the Bank of Japan for the Japanese yen, and we also have an interest rate from the for GBP. Okay, the official bank rate vote, and all 3 of these are happening on Thursday. For some of you guys, it's going to be Wednesday, and the reason why I say that is keep in mind, if you guys watch me and you guys follow me, you know I'm in Thailand right now. So right now it's like 8 in the morning for me. So all of these times on the economic calendar is different for you guys. For me personally, all 3 interest rate decisions all land on Thursday. The first one happening at 2 a.m. But for most of you guys, it's going to be split up. There's going to be some on Wednesday and some on Thursday. Okay, so just make sure that if that confuses you at all, just make sure you have your economic calendar set to the right time, okay? Most notably by far, guys. Most notably, and then not just those 3 interest rate decisions, but also to end off for the pound, there's some GDP for the pound, there's some GDP for the Canadian dollar, there's some GDP for the US dollar. Also, the beginning of this week, there's some CPI for the Canadian dollar and CPI for the pound. So you guys can see, very wild week. Not just 3 interest rate decisions, but a lot of other high impact news on tap as well. Now, above everything, if you guys want to know what the most the highest impact piece of news is, and that's definitely by far going to be the the interest rate hike coming from the Fed. And for me, it's going to be Thursday morning at like 2 in the morning. For most of you guys, it is going to be Wednesday afternoon. Okay, so it's going to come middle of this week, and we are expecting the Fed to raise rates. Okay, now at this point, is it debatable? Is there a chance that they don't raise interest rates? Very slim. It's about a 95% chance that they do raise interest rates. Okay, so it's pretty much almost guaranteed that they're going to raise interest rates. Okay, the Fed has talked a bit, literally, and I talked about this during my daily webinars with my students this past week, that if you guys paid attention, literally last year this time, 12 months ago, the Fed announced, actually early December last year, so over 12 months ago, the Fed announced that there was going to be they were planning 4 interest rate hikes for the month or for the year of 2018. Okay, there's already been 3 interest rate hikes. You can actually see right here that the first interest rate hike happened in March of this year, and then the second interest rate hike happened in June, and then the third interest rate hike happened in September. All right, and now we're having the 4th and final one happening in December. Now there's a little bit of hoopla, you could say, or a little bit of discrepancy on if they were going to raise interest rates. If you guys remember that just a few weeks ago, There's like the vice chair of the Federal Reserve, talking about possibly waiting on the interest rate decision. Even Powell had some very dovish tones towards the hiking the interest rate, and recently, just over the past week or so, they did decide, okay, it's something that they're going to be doing for sure. It's back on the table again, and that's looks like what's going to be happening. So this is going to be a huge market mover for the U.S. dollar. If you guys have been watching the dollar index, which we're going to look at in just a moment, or Euro USD, or USD Swiss franc, or pretty much almost all the pairs revolving the US dollar, they've all just kind of been in this massive consolidation the past month or so. And that's what we're going to look at right now, okay? And what I want to first talk about is I want to talk about my long-term outlook on the dollar index, okay? You guys know that for a while here, let's see. I just want to make sure everybody can see everything good. You guys can hear all good? Sorry, I have this pulled up on my phone as well, and I just want to make sure that you guys can hear everything. Okay, I'm just going to keep going because I'm not sure. I'm assuming that you guys can hear everything fine. For some reason, it's not pulling up everything for me on my phone, but okay, I'm just going to keep going. Real quick, in the chat, Arton asks, when is it good to start trading again? Right after New Year's? Yeah, within days after New Year's. Obviously New Year's, the U.S. banks are closed, so a couple days after. But we also have New Year's. I believe if we look at the calendar, New Year's falls on the first is a Wednesday, so that week is probably going to be over. I'm probably not going to be interested in trading anything that week. It's going to come the very next full week that the markets are open. But I want to talk about the dollar index, guys, okay? So here's the dollar index, and this is a weekly time frame, right? So all of these candles are the weekly. And again, just to recap, I know I've gone over this a lot, but just for some of you guys that might be new or just kind of forgot about what's going on with the dollar index, if we go back to 2017, we were in a major downtrend for all of 2017, right? We can see 2017 starts at the top of the chart over here, and end of 2017 ends at the bottom of the chart over here. And then for the first couple months, we can actually see from January 2018 to April 2018. So for 4 months, the dollar index was just in this super consolidation phase. It was in a major bear flag. There was a lot of flip-flopping in this area. Was it going to go lower? What was going on here? Because it was consolidating. It was looking like for some more downside, but we did ultimately see this downtrend break in late April, early May of this year, and we've been in a major uptrend on the dollar index since, right? A big correction phase since that big downtrend of 2017. Now, more recently, over the past couple weeks, right? A couple weeks ago, about 5 or 6 weeks ago, we made a strong exhaustion candle after a pretty decent rally and a nice rejection off of the yearly highs around November 12th, the week of November 12th on the dollar index. Now, that is when I kind of started to change my bias from being bullish and just starting to possibly look for some long-term sells. We caught a little bit of moves here and there. Euro USD, we caught some moves on buying and selling, actually both directions, made some nice profits. If you guys check the MyFX book, you check my results for the past 2 months, we've done some nice returns. We've been both months in the green. This month, super in the green at over 6% profit. So that's another reason why, for me, in my head, the trading year is done, right? I'm up 6%. I'm happy with usually December isn't the most amazing month anyways, and I have some above amazing results. You guys know that, or maybe if you don't know, now you'll know when I say this, that I aim to make 3 to 5% on my returns every month. That's what I aim for, okay? And I know it's not going to get there every single month. Some month I'm going to have way more than that. You guys know my best month this year, according to my MyFX book, was 15% in the month of July, I believe. Yeah, it was the month of July. It was either July or August. I know it was a 15% month. That was my best month this year. And then sometimes we'll have some break-even months. We'll have some small losing months. And that's just the way trading is. But I try to aim for, where if at the end of 1 year, if you were to break it down to a monthly average, it would break down to averaging somewhere between 3 to 5% a month. And some of you guys listening to that, hearing me say that might be like, well, 3 to 5% per month is nothing. Well, it actually is a lot, guys. It's a lot. It's that's if you were to look at that on a yearly basis, we're looking at like quadruple, 3, 4, 5 times higher than your average mutual fund. And in terms of managing multiple seven figures, having over 400 clients, personal clients that I've been able to acquire and develop worldwide, as well as some private equity for a firm that I trade for, it's a lot of money, guys. It's big returns. So, don't fool yourself thinking 3 to 5% isn't nothing, because if you can consistently do, average out 3 to 5% returns a month on a long-term scale, you'll be able to manage literally millions and millions, tens of millions, hundreds of millions of dollars. And that in turn, you're able to obviously have profit share, right? Imagine managing $10 million, right? And getting to keep a percentage of the profits that you make, right? And making like even 3% on a $10 million account. That's a ton of money, guys. That's some big boy money right there. And that's what I think you guys should all strive for. Because not everybody has $50,000 or $100,000 of their own personal money to jump into Forex. So if you don't, you should focus on leveraging your skills and acquiring clients. That's probably the best route to go about it. And the way you do that is with consistency and keeping a track record of what you do. So that's what my big recommendation. Okay, but for the dollar index, this is stand, guys. It looks bullish still. Okay, as much as I love to still be on the downside, and as much as I would love to be looking for sells, we just really are not getting enough momentum to the downside. And it's as simple as that, okay? There's no other way to put it. And some of you guys might be saying, well, David, you've been talking about for weeks now that you've been looking to sell the dollar index. I have. I'm not saying that I haven't, guys. But also, here's another thing: you want to be very careful not to marry your bias in the Forex market, guys. As much as I want to be looking at selling the dollar index and buying Euro USD and looking for this reversal on the dollar index, we aren't getting it. It's as simple as that, right? It starts with this big weekly candle back on November 12th, right? I would have really liked to have seen some bearish momentum on this after this weekly candle, or at least a couple weeks following this weekly candle, start to see the dollar index fall, and we just haven't. We've just seen this reaccumulation happen on the dollar index, and we really haven't seen a whole lot of movement to the downside. So that leads me to believe that the dollar index is still bullish, right? It's still very much so bullish. Even last week's candle really confirmed that. Look at this on the weekly candle, and look at this on the daily too, right? We really have not broken out of making higher lows and higher highs. We continue to consolidate sideways, and it looks like we're going to go higher. Now, what I want you guys to be very careful of is don't think that this is just easy and free money, okay? Because you might be looking at the interest rate decision and telling yourself, and all of you guys should know this, by the way, okay? I'm just going to back up really quickly to interest rate decisions. And if you don't know this, you need to write this down: 110% zero excuses, okay? You need to create a whole section in your notebook for interest rate decisions so you can take more notes down the road. When my course comes out, you can read up all about the interest rate decision section that I have in there. But in short, and I'm just going to make this very short and sweet for you guys, and there's also going to be a but at the end, okay? In short, generally speaking, and this is a long-term effect. This isn't always an immediate effect, okay? Long-term effect on interest rates being raised, okay, or an interest rate hike generally has a positive tone, has a good tone for that currency. and then vice versa, right? So an interest rate cut or when they decrease interest rates, that generally tends to have a negative tone or a negative effect on that currency long term. Okay? And I'm not going to get into all of the details long term, but just kind of use your brain for a second and think if interest rates go up, right? And that affects you as a consumer. You're going out to buy a house and you need a house loan, and the interest rate goes up. What do you think is probably going to happen, right? If the interest rates are higher than they were, 6 months ago, when you're looking at a home loan, let's say you're looking at a home loan and 6 months ago, on a 15-year mortgage, the interest rate was, 2.1%, and now it's 2.7%, right? It's gone up 0.6%. Well, you're probably less likely to get that loan, which means if you don't need all that money from the government, well, the government doesn't have to print that cash for you. So not printing cash, it's a domino effect, guys. Not printing that cash leads to deflation, right? It's the opposite of inflation. It's deflation. It deflates that currency, which is good for the currency, right? It makes it stronger because inflation only devalues the currency. So, and that's just one aspect of it, right? That's just from a consumer standpoint. That's just a very simplistic way to explain interest rates, right? There's a much larger effect from the bank side, central banks, and money from one country to another country, but in bonds and just affecting everything from quantitative easing, everything like that. But from a consumer standpoint, that's the easiest way to explain how interest rate affects the entire economy as a whole, all the way down to the consumer level, okay? But that being said, okay, and then we also know that the dollar index and Euro USD are the exact opposite of each other, right? Right? Look at these two charts, right? We look at the dollar index, major bullish on the weekly, right? Major downtrend in 2017, uptrend for a majority of this year. Euro USD, complete opposite, right? Big uptrend in 2017, downtrend for a majority of this year, and then rather than consolidating at the highs of this year like the dollar index is, Euro USD, we're consolidating at the lows. So if we know that if this chart goes up, we know that that is strengthening of the dollar index or a strengthening of the dollar, then that means Euro USD has to go down, right? Because obviously, if you look at Euro USD, Euro is the quote base currency, USD is the quote currency, which if this pair goes down, that's bad for the Euro and good for the US dollar. So knowing all of that, this is the but, guys, but regarding interest rate decisions, I don't want you to just think, oh, I'm going to just make some easy money and over leverage my account on Thursday, and I have $1,000 in my account and I'm going to drop 2 standard lots because my broker lets me drop a couple lots. I'm going to drop some lots selling Euro USD, and I'm going to try to solve all my problems, and I'm going to try to hit a home run, and I'm going to try to flip this $1,000 account to $10,000, and yeah, I'm going to make all those, I'm going to make those losses back this year from me over leveraging and trying to flip my accounts on other trades, and I didn't learn my lesson in the past, and I'm going to try to get rich on this trade. Guys, it's not that simple, okay? Can it be that simple? Yes, but I also, at the same time with telling you guys interest rates going up is good and interest rates going down is bad, and I told my students this last week. I said, if you really want to start to get to know the charts, if you really care about your success and you really care about learning, what you should do is right after this webinar, you should go onto the history on Forex Factory, and you should go past minimum the past 5 years of data. You should go back to a minimum at least 2013 this time, and go and just observe on the charts and write down what happened every time they raised interest rates. And it's not always as simple, okay, the dollar index spikes up every time they raise interest rates, because sometimes the dollar index actually drops when they raise interest rates, which you might be asking yourself, what is that? That doesn't make any sense, David. You just said that when they raise interest rates, that's good, and when they decrease interest rates, that's bad. Yeah, but I also said, what was the very beginning of what I said to all of that, is it's generally speaking a long-term effect, okay? So don't think, guys, that it's just easy money, that you're just going to solve all your problems and over leverage your account, because that's what the market makers, want you to think. They want you to think that it's easy money, and as most of you guys know, if you've been in Forex for any amount of time by now, it's not always easy. Okay, it's not easy. Well, I mean, it's in my opinion, it is easy. It's simple if you're using the right tools and you are using good risk management, good risk reward. It actually is much simpler than a lot of people make it out to be. But what I'm talking about is solving all your problems and getting rich overnight. It's not as easy as that. Okay, guys, you have to respect the markets or they will literally eat you alive. Okay. Arton says, is it you or is it just laggy at times? If it's laggy, I really apologize. Go ahead and just watch the replay if it's too laggy because, like I said, I'm on an island, guys, in Thailand right now. I'm on a little island off of the coast of southern Thailand right now, and the Wi-Fi is obviously, you know, it is what it is. I'm on a tiny island, and it's not super amazing. So if the Wi-Fi is not great, I apologize. It is what it is. The next time we have a weekly outlook, guys, I'm back in my office, fiber optic connection, you know, 1 gigabit download speed, so there's going to be no lag whatsoever. Okay, but so that's my opinion. So here's kind of where I I digress a little bit. Is I am interested in the dollar index strengthening, right? I do believe that the interest rate decision will probably be good for the dollar index. But I'm also respecting the markets at the same time and understand that we could see like a buy the rumor, sell the news type thing. There's also a good chance that this rate hike has already been priced in over the past couple of weeks. As we have seen some strengthening in the dollar index, it may not be priced in yet because there was a lot of like light talking about them possibly not raising interest rates in late November, early December. So there's a chance that, or it was mostly late November they were talking about that. So there is a chance that the market hasn't had time to price in these interest rate hikes. Okay, so dollar index I'm bullish on. Gold, I'm not interested in trading gold. I'm going to skip over gold. Somebody asks, can I go over GBP CAD? Unfortunately, I'm not interested in trading GBP CAD whatsoever, guys. I don't feel like it doesn't do justice, or it's to me it's not fair to you guys if I just kind of like half-ass analysis on a pair. I'm only interested in a few particular pairs, so we're gonna go over those right now. Euro USD, I am interested in potentially looking for sells. Now, a lot of these trades aren't going to come until next year for me. So for the next 2 weeks, I'm done trading mostly, guys. Unless I see something that really sticks out, unless me or Louis see something that just really sticks out that I'm really interested in getting into, that I obviously am going to use 1% risk on. I'm already up 6% for the month. I'm only willing to give 1% back. So if I do see a trade that looks really good, that has some good confluence between the technicals and fundamentals, but I'll be honest, if you're here for that free trade or you're here to see what that trade is, you guys like don't waste your time. I would rather you just be here to learn and hear kind of like my opinions and me talk about the markets a little bit than anything else. I'm not interested in one particular pair. But Euro USD looks pretty bearish. USD Swiss franc looks bullish in my opinion. Pound yen, I'm not interested in trading until next year. Dollar yen, I'm not really interested in trading till next year, but looks bullish. AUD USD, AUD USD and NZD USD, I'm not interested in trading until next year. Well, NZD USD doesn't look too bad for a potential sell this week. We kind of made it. NZD USD kind of made itself clear that the correction period that we were in over the past like 6-7 weeks has kind of come to an end. The dollar index looks to be strengthening, so we could see some downside on this. There's been a lot of Chinese hoopla, if you will, that may affect the Australian dollar and the New Zealand dollar. If you're one of my students, I've talked about on my webinars. I may even have discussed this on one of the previous the last weekly outlook as well. But the Chinese economy heavily affects the Australian dollar and the New Zealand dollar. And if you want to know why, it's going to be one of my students. I go over all of that stuff. Okay, today is not the day I go over in depth into all of the fundamentals and why the Chinese economy affects the Australian dollar and the New Zealand dollar. But if you live in Australia, if you live in New Zealand, you probably know why also. Okay. And USD CAD, not interested in USD CAD. It is trending higher. We could see USD CAD move higher. I already called the big move on this pair. For those of you guys that missed it, I'm going to show it once again because I don't know. I like showing this trade. It was something very accurate that I called. If it wants to load, Wi-Fi is not very friendly out here, so it might not load. But I called a buy all the way down here, guys, at these lows at the 128 area. Called a buy all the way up to 134. So that's like a 600 pip move I called, over 500 pip move I called, literally like to a T. I wish it would load, but it says I called a buy zone down here and had it marked off the 134 level. So I think USD CAD could go higher though. Pretty much everything that I'm looking at is bullish on the dollar index right now. Euro NZD, I'm not interested in trading. I'm actually going to unmark that. Same thing with Euro AUD. I'm unmarking both of those. USD Singapore dollar, I was interested in looking for some sorts of sells on USD Singapore dollar, but if we do see this rate hike come in and we do see this appreciation of the US dollar, that USD Singapore dollar could go higher. So I'm actually not interested in trading USD Singapore dollar. And AUD USD, I'm actually not interested in trading AUD USD or AUD NZD either. So in short, guys, what's on my list right now is looking for some long-term downside, some potential long-term downside coming over the next couple months on Euro USD. Some potential long-term upside coming over the next couple months on USD Swiss franc, and some potential long-term long-term downside over the upcoming months on AUD USD and NZD USD. So that's really it, guys. I wish this week was more exciting, but you guys really need to respect the fact that we're getting to the end of the year. We've had a killer year. We've had a really good run this year, especially the last past 60 days have been explosive for positive traders. We've had some really nice growth. And I'll show you guys, right? There's no need to hide anything real quick. We go to positive traders and we go to my FX book. I want you guys all to see this. If it wants to load, there we go. It'll load. Okay, guys. Right now, monthly, we're averaging 3.29%, which is awesome. I'm happy with that, right? When I'm managing multiple figures, so I'm 3.29% pays my bills, way more than pays my bills. Pays for my lifestyle, pays for my travels in Thailand, does everything that I need it to do to be able to to support my lifestyle with that 3%. And December, right here, you guys can see we're up 6% for the month. So I'm very happy with where this month is at. I'm very happy with where we're at for the year. And I'm really happy just with my FX book overall. I've got some really nice returns. It's very good towards few potential clients that want to invest. And if you're looking at this too and you want me to trade, guys, I'll just plug myself in very quickly. You can go to the link in the description. It says copy my trades for free. You don't have to pay anything up front. I charge a 35% profit share on any of the profits that I make on your account above the highest watermark. If you aren't familiar with the highest watermark is, Google that, but it's in favor of the investors. It basically makes it so that I'm not able to make double profit share on profits that I make you if we have a losing month or a couple losing trades, and then make those profits back to the original gain, if that makes any sense to you guys. But it's better to visualize it if you just Google profit share. But guys, that's it for the year. I'm really not interested in doing any trading. Like I said, I'm in some really nice profits for the year. I'm not getting greedy. I'm not really interested in trading every single day, and I also respect that I'm a higher time frame trader. Maybe for some of you guys that are into scalping and taking 100 trades in a week and you love rush in the market, that's you. I've been there, done that, got the t-shirt. I've been in the market for 5 years now, and I don't believe that long term you can sustain that. Scalping is sustainable, right? Nobody wants to sit in front of their computer for 18 hours a day, 7 days a week, 365 days a year, right? No, I mean, if you like that, if you're a freak like that, sorry, I don't mean to use that word freak, but if you're into that type of thing, do that, guys. But there's a saying on a post. I'm in Thailand right now. Obviously, I've said that like a million times, but this past week I kind of took some time to really just disconnect from the world, and I disconnected. Obviously I was doing my daily webinars with my students and still doing all that good stuff and still looking at trades. I think we had like one trade last week still, but I pretty much was disconnecting the rest of the time, right? Just kind of forgetting all about social media, forgetting about having to post on Instagram and this and that, and just really like living in the moment and enjoying my time. And it reminded me that, guys, I work to live. I don't live to work. And I trade for time freedom at the end of the day. Right? I trade to live my life. I trade to experience my life. I'm 25 years old and I work very, very hard. I've worked very hard to get to where I'm at, and it's good to enjoy life sometimes and to have, but more importantly, balance, right? When we talk about grinding and staying focused, it's about being able to take a small break here and there and like live in the moment and live your life and appreciate world and the world around you. But then also be able to get back into the grind like right away and just like pick up that momentum where you left off and not have anything slow down. But it's also very hard sometimes. I know you guys might have this perspective of, oh, every single day, every single week needs to be this crazy wild ride in the market. And it's just not like that, guys. I don't believe that that's how trading should be. I think you can make, not I don't think, I know because I'm living proof of it, that you can make some serious wealth. We're talking like literally, guys, like multiple six figures in the market. For me, soon to be multiple seven figures in the market as my accounts grow and as the firm that I trade for, they give me more money to trade with. And as I gain more clients for myself, my income is only going to go up. And it only takes a few trades a month, guys. It only takes a few really good trades every year to make some serious profit. Just to kind of put things into perspective. Let me just say this last thing, and just to kind of put things into perspective, guys. I told you guys that my best trading month this year was back in July, 15%, right? Imagine managing just $1 million account. So $1 million and making 15% on that account and getting to keep half of what you just made. Okay, so quick math, 15% of $1 million is $150,000, 150,000 US dollars, and imagine getting to keep half of that. $75,000 made in 1 month. Okay, now is that where I want to be? No, I want to be making a lot more than that. But $75,000 is like triple what the average person makes in an entire year, right? The average income for the US at least. For some other countries, it's like 10 times or 5 times what that the average person makes. Maybe it's like less than that, but you guys know what I'm trying to say. Regardless, $75,000 in 1 month, that can really pick up a lot of like shortcoming months previous to that and a lot of short months after that. So it only takes a couple months out of the year where you really need to kill it and hit it out of the park to be able to support, to have a lifestyle that's supported off of Forex, to be able to do things like travel the world or do whatever else you want to do. So that's kind of it for the day, guys. Looks like for some of you guys, I don't know why it's the live is just not like working very well. So I really apologize for the weak connection, guys, on this webinar, but I look forward to seeing you guys next year on the weekly outlooks. Please do not lose your focus, guys. Just because we go 2 weeks without doing a weekly outlook doesn't mean Positive Traders is going anywhere, guys. We kill it back with the momentum as soon as the markets start to pick things up. So I appreciate you guys' time. Have a great rest of your week. Make sure you are staying safe out there in the markets. Make sure you're using good risk management, good risk to reward. Respect the markets. Don't think it's just easy and quick money that you're just going to get in and make $1 million overnight. It's definitely not that. If you treat it like that, you're going to lose all your money. And quite honestly, like I always say, if you have someone here that is a professional trader, has a track record, and is telling you the way to do things, and is telling you not to wait the way to do things, and you go and do the things the way I'm saying not to do them, then you deserve to, and you lose your money, you deserve to lose your money straight up, because you actually have somebody here telling you what not to do. And if you just like disregard that and push what I say off to the side and you still try to go and flip your account and get rich quick, you deserve to lose every penny you have in your account straight up, guys. I have no remorse for somebody that's not going to take advice from a professional trader. Right? I'm not saying I'm the best out there, but I'm saying what I know works and I have proof of it working, right? I'm not just talking out my ass over here. I actually have a track record that shows and proves and legitimizes my returns and my claims of knowing what I'm talking about. And if you decide to disregard that, well, then that's on you and you deserve to lose your money. But I really hope and I appreciate those of you guys that are watching this and you do take that time to actually learn and are treating Forex the right way and treating it as this long 10, 15, 20 year journey and not some, okay, how far can I get in 3 months? Can I quit my job in 6 months? Type of thing. So appreciate you guys. Students, I'll see you guys tomorrow on the daily webinar. And if you guys have any other questions, all my social links are in the description. You can reach out to me on any social media and I'll get back to you guys as soon as I can. But